Good evening, everybody, and welcome back to this webinar series in collaboration between Vantage Markets and OneClickFX. I'm glad to see that there's many of you, probably most of you were present at our presentation, I think last week or the week before, of OneClickFX, which is a Metatrader tool to simplify your trading that Vantage Markets presents to you for free. You only have to open a live account and have at your disposal a free 15 days trial to see if you like these instruments. And then with a small deposit, if you like them, you can maintain them with no limits for free, of course. Since I think many of you were present at the presentation webinar, I'd like to ask you if you have any questions on the instruments, on particular indicators, or on the main setups, operational setups that we examined in the previous webinars. I activated the chat, so you can write all your questions via the chat. I'll be glad to respond to every one of you. But before we start, I have to remind you that any material and or content provided herein is intended for educational purposes only and does not constitute investment advice on how clients should trade, as it does not take into consideration your personal objectives, financial circumstances, or needs. Please seek independent advice before making any trading decisions. Reliance on such material is solely at your own risk, and the company, Vantage Global Limited, cannot be held responsible for any losses resulting directly or indirectly from such reliance. Past performance is not an indication of future results. So I see there's already a question, a very open question. How can I start trading? It comes from Burhan. Thank you for your question, Burhan. We have Hassan that asks how I'm doing. Well, it's raining. I am an islander. I'm accustomed to the sun and warm temperatures mostly all year round, so it's not a good week, but it should go away sooner rather than later. Let's hope. For everything else, I'm fine, thank you. So how can I start trading? Burhan, my company created this software for the MT4, which is a combination of indicators that help you understand the market. When you want to start trading, of course, you're going to have to start somewhere. And usually we start by studying technical analysis, continuation and inversion patterns. We study Japanese candlesticks. All these things have to be done. There's no way around it. You have to know what candlesticks represent, what candlesticks of a certain form or outlook imply in terms of sentiment of the indicators, positioning, reasoning of the investors. And you also have to know the technical analysis patterns, in order to recognize if the market is constructing certain typical patterns, more than for the opportunity to actually trade the technical analysis patterns, but in order to see if the market is actually responding to their formation as we would expect by the technical analysis or not, because most times, many times at this point, inversion patterns, continuation patterns, the classical technical analysis patterns are just traps for inexperienced traders. I have an head and shoulders the neckline was broken, we have the retest, it means the market is going short, and the market, of course, skyrockets. Okay, so many times traditional technical analysis is more useful to see if a trap is being built by experienced traders, large traders that want to give the impression that a certain type of move is about to begin. Usually these are opportunities for those that move the market to collect the liquidity of those that trade certain classic patterns that are of no use in operational terms. But nevertheless, we should know what candlestick analysis is and what technical analysis is. I won't tell you that you don't need all of that, that you can start directly with one-click FX, but one-click FX can help you understand certain market dynamics very quickly, even without knowing all that I mentioned earlier on. So just to recap, one-click FX is an instrument that combines the percentage analysis of this indicator, which is named Square Dashboard, with some technical studies that provide us with levels and reference points to structure our trades, trend following and contrarian ones. So Burhan, the most important thing we should understand about the market is the trend analysis. Okay, when you look at a chart, let's say a euro-dollar chart, a chart of the Nasdaq index, you should be able to identify the trend of the market. You should be able to say what the market is actually doing within a certain time span. Because right now, the Nasdaq index is going down, but what is the trend of the instrument? The Nasdaq, since the beginning of the month gains 5.72%. So what's the trend on the Nasdaq index? The trend is, of course, bullish. The market is going up. Now we are inside a short-term correction. So what's the correct approach to this type of market once you know what the trend actually is? Well, the approach should be to look for long entries because the trend is bullish. So we look for long operations, buy positions. Okay, so in a market environment where you have an index or an entire asset class, all the indices, all the metals, all the energy instruments that are going up, during corrections, you wait for the completion of the correction in order to look for a buy opportunity. You can only say that this is the correct approach if you are able to identify the trend. And also there's a specific aspect to the trend, which is the time frame of reference of the trend, because on the Nasdaq index, we have a short-term bullish trend. It started last year. And from an annual standpoint, the trend is bullish. We are up, I think, 14% since the beginning of the year. Almost 6% has been registered this month. So in a couple of days from the start of February. So we are in a long trend. Knowing this as a beginner is something that helps us quite a lot. It's not something that we should give for granted, that as newbies, as people that are looking at the markets from a short, that have been looking at the markets for a short period of time, that they should automatically know how to identify the trend of a market. So in this sense, one-click FX saves you the time you have to invest to study the trend of the markets and to start understanding what's the trend of a market for yourself. Another important aspect of the trend analysis is the fact that you cannot determine the trend of every single market taken in isolation. So let's say you open the US dollar Canadian dollar chart, you look at the trend, it's of course bullish since the beginning of the month, and be glad with that information. It could be enough sometimes, but traders look at the trend of the entire market, because between asset classes of different types of instruments, there are correlations. So usually when the market, the investors are inclined to risk, you have the indices that go up, usually oil, usually the commodity currencies. So the Australian dollar, the Canadian dollar, the New Zealand dollar, often the pound. In certain periods, it was the euro was one of the risk-on currencies. When the investors are not inclined to assume risk, you see instruments like the Japanese yen go up, the US dollar, the Swiss franc, sometimes gold. Well, that depends. Of course, when investors are adverse to risk, you're not going to see purchases on Bitcoin and Ethereum, of course, on the entire asset class of the cryptocurrencies. So the bottom line is we should always look at the overall outlook of the market, because aside from not having studied technical analysis, candlestick analysis, indicators, basic indicators, one other problem that beginners tend to find when they start trading is the fact consists in trying to trade a single market. You know, the broker sent me an email where it said natural gas is up 5%. Okay, so, or crude oil is down 4%. So these are the instruments that we usually hear people talk about, but many times these are very dangerous, very difficult instruments, especially for beginners. Many people I hear trade only gold. I do gold. I don't know why. I usually say, I ask why, I get confused answers. But the main point is we should learn early on to look at the entire market and look for the best opportunities based on what the market is doing as a whole. And in order to understand what the market is doing as a whole, we have to have it at our hand in a single place when we can look at what the market is actually doing overall. And this is why we have this instrument that allows you to set up a watch list of instruments. And by default, we put in the list the Forex, the main Forex pairs. There are 28 in our opinion. We have the metals, the indices, and the cryptocurrencies. We also have gold, so the metals. I'm not seeing oil. Perhaps I forgot to add it to the list, but you should also know what crude oil is doing, of course, maybe even natural gas, not necessarily in order to trade it, but you should know what the market is doing. And with an instrument like Square Dashboard, at any time, you can actually, you can say without a doubt what the market is doing as a whole and what every instrument is doing, because the indicator gives you for every instrument the current price and the net change of the daily, weekly, and monthly timeframes. So you have the short-term trend of every instrument. Once you see it for every instrument, you can also see what the Australian dollar, for example, is doing as a whole. Okay. Yesterday, it went up after the rate hike from the central bank. Now it's losing ground again. Today, we have an overall, we had an overall risk-off profile of the market for the entire day, but the indices I see are picking up again, so it's not a clear-cut day in terms of risk profile of the market. So this is the case when we focus on a particular instrument because, for example, a certain currency is clearly stronger than another. Because if we don't have a clear outlook of the market, well, trading the correlations between asset classes becomes very difficult. In those days when you don't see the usual correlations verified, you can go and look for a single instrument where there might be a good trading opportunity. So, for example, today, the pound has been the strongest currency, and the Australian dollar the weakest for the entire day. Pound Australian dollar is actually in a bearish trend on an annual basis. It's not a strong bearish trend, but we are in a bearish trend. But today, the balance of power between the two currencies was clearly in favor of the pound. So today, we should have looked for a long entry on pound Australian dollar. It says, Burhan, I am observing the market for a week. The market is very tricky. I am unable to do the risk assessment. What's the trading strategy for beginner? Okay. We're going to answer that right away. And then there's Chris that says, are these percent real time at this moment? And are the percentages from the beginning of the day, week, month, or from the last 24 hours, 7 days, 30 days? Okay, this is an important question. Let's go over the structure of the levels. The square dashboard shows you the net change, so the percentage variation, the daily, the weekly, and the monthly, which means these are the net changes calculated starting from the previous daily close, the previous weekly close, and the previous monthly close. Okay. When the net changes are aligned, so if the instrument is moving in the same direction on every time frame, the symbol turns red, meaning we are in a short-term bearish trend. If the percentages, the percentage variations are aligned and positive, it means we have a short-term bullish trend, and the symbol becomes green. When you have green symbols, it means that the net changes are not aligned. The pair, the index is not moving in the same direction in positive or negative territories on all three time frames, which usually means that the market is correcting. So pound yen, since the beginning of the month, has been bearish, in a bearish tendency. This is the previous monthly close, and the market has been moving downwards. It went and lost more than 2% for February before this rebound, but now we're actually in a short area. I'm going to explain myself on a monthly basis, but today on a daily basis, of course, the market is rebounding. As you can see, after yesterday's sell-off, which ended on the minus 1.25% level, the market retraced basically 50% of the previous bearish impulse, so to speak. The net changes provided by Square Dashboard are in real time for all three time frames, and you can see the real-time net change of the pair of the instrument also here in the operational chart. Okay, how can you can have access to this panel? Okay, this is an MT4 profile. Then we're gonna go back to Burhan's questions. This is a software for Metatrader 4. In order to have it for free, you should open a trading account, a live trading account with Vantage Markets, and ask for a free trial of the software. The software is very easy to install. Once you install it, you get the license profile to activate your license. And then you get the one-click FX profile, which is composed of two windows where you have the percentage analysis and the navigation instrument, and three operational models that you can access clicking on these buttons. In order to have it for free, the deposit is of only 500 euro. It runs on Mac with a VPS. Yes, with a VPS, you can have it. You can install it on a Mac, but you have to mirror a Windows desktop. It doesn't work automatically on Mac. I'm sorry. The general analysis of the market and the trend analysis and three different operational models, and that can be used simultaneously, meaning you can combine the information provided by the three templates in order to have a better idea where to enter the market, where to exit the market for whatever reason, and what are the most sensitive levels. Okay, so the market is very tricky. Burhan was saying, I'm unable to do the risk assessment. What's the trading strategy for beginners? So once you know what the market trend is, the trend of the market as a whole and of the single instruments, the problem for you as a trader is to determine where to enter the market and where to exit the market. So what you need on your chart are reference points, levels, horizontal levels, supports and resistances. These are the levels where the market is made, where investors take decisions, where the price starts to move. So having supports and resistances is the most important thing for a trader. And our intuition was to translate net changes into horizontal levels of supports and resistance. This is the euro dollar, and these are the past 10 days of trading. You notice right away that every swing point, major or minor, happens on these levels. These are price levels. So for example, this one is 1.0836, but it's not just a price, it's a net change to which a price corresponds. If day by day, week by week, month by month, if always you see the market change direction, register swing points on these levels, it means that somebody is looking at them. So having these levels and having these levels before the price actually reaches them is an advantage that nobody else has. Okay, so imagine if you could know that every time the market changes direction, it happens on a certain kind of level. Okay, well, if that's true, if there's a way to foresee what are the percentage levels where the market is going to turn, of course you have an advantage over everybody else. And I personally use these percentage levels for my trading. I'm a contrarian trader. I'm trying to add a trend following approach to my trading, and I use mostly the percentage levels and the balance of power between the currencies. So here you have different types of levels based on the time horizon. So these are the daily levels, the levels calculated starting from the previous daily close for intraday trading. If you go to the 4-hour time frame, you have the weekly levels. They're, as you can see, they move by 0.50% increments. On a daily basis, we have 0.25% increments. And if you go to the daily time frame, you have the monthly levels. So the levels calculated starting from the previous monthly close, and they are 1% apart. Okay. Depending on how much time you have to dedicate, you have at your disposal to dedicate to trading, you can choose different time horizons for your operations, for your positions. Once you select, let's say, a daily approach, an intraday approach, once you select your time horizon, you need a guide to structure your trade. And the guide is the trend of the market, the momentum of the market, so is there buying or selling pressure, and the horizontal levels. Let's see how the percent pivot works. I became a profitable trader with this model, with these operational grids. Okay, I'm gonna tell you another thing that actually made me a trader. It took a while before I actually became a trader. And what happens? So if you have a market that's trending, when the new period opens, you need to identify a pattern that's going to tell you that trend, that momentum, that tendency is going to continue or not. So you need a graphic pattern, okay, and the support of another information, which for us is the algorithmic analysis of the RSI in this case. So the euro dollar found its top and it started to correct. Okay, so this is the first day of correction. Then what happens? The market opens and we have our daily starting range, which is the range between the first resistance and the first support. Okay. So the market started correcting, and what happens the day after? So we're having negative percentage values on Square dashboard. Then what happens the day after? The market tests support, but it doesn't break it right away. Then it goes to test the resistance, and as you can see, the market didn't manage to go above the daily resistance. So we are in this market pattern. So there's an impulse, a correction of the previous impulse that actually ends up on a resistance that we know of because we have the percent pivot indicator, and the market goes back down. It breaks support, then it does the retest, okay, goes back up to see if this was if this support can become now a resistance, and it does, and it continues to fall, and it continues to fall down. All the while we have a bearish algorithmic analysis. The market is going down. We have all this, so this is a level to sell the euro dollar. Then the day after, the market opens, and there's a consolidation phase, a lateral phase. The market doesn't even come close to a test of the daily resistance, and it goes directly for the breakout of the support. There's a retest. The algorithmic analysis is still bearish, and the market continues to fall down. So here we could have opened a short position. The day before, we could have opened here, around here, a short position. And as you can see, not only you have the entry point. Now we're going to go to a long setup. I was anticipating a long setup on pound Australian dollar. Not only you have the entry level, but you also have the potential levels to take profit, to place your take profit order. Okay, but how should we select the proper level to set up our take profit order? Well, it depends on a couple of factors. We should always choose an average level to get out of the market if we are doing a daily trade, an intraday trade. Okay, so we should select either the level that's in confluence with a previous price structure, a support, a resistance for long entries, okay, or a level which is consistent with the average range of the considered period for the instrument. If you look back with the percent pivot, let's say 100 periods of the euro dollar, you soon realize that the euro dollar, except when there's some macroeconomic news, tends to do an average move to the upside or the downside, which is not greater than 0.75%. Okay, so your average target is 0.50% or 0.75% on a daily basis. So when you enter the market, when the price breaks below the minus 0.25% pivot, well, you should already expect that the market is probably going to do minus 0.75, because this is the average range of the pair, which is usually around 100 pips per day. In percentage terms, we usually see 0.50, 0.75% moves. Of course, the range is a different concept because it takes into consideration the excursion between the high and the low, whereas the percentage variation depends on the movement of the price during the day, because 100 pips were done as a whole here, but but there was a bullish phase earlier on, and then the market inverted. So if the market had gone straight down with 100 pips from here, we probably would have made minus 1.25%. Okay, so as a rule of thumb, you place the take profit order on a previous price structure or on an average percentage levels that you can see every day is reached by the particular instrument. Of course, you're not going to see moves greater than 0.75% on the euro dollar on average. But of course, if you put in Bitcoin, you see that the average move is very different. If you consider the NASDAQ, you will see that the average daily move is very different. Okay, so you have to take into consideration what you are trading. Okay, let me go over some other questions. No, there are no other questions. Okay, so once you select the instrument, let's go to the pound Australian dollar. Because there's a clear trend, or because there's a clear momentum or balance of power between two currencies clearly in favor of one of them. And then you go to the levels. You go to the levels, you start from the starting range, and then you see what happens on resistance and support. What we want to see is the breakout of the support or of the resistance, in this case, supported by the algorithmic analysis. And we also want to see something that that is taught by technical analysis. So the change of polarity of a level. You know that a resistance becomes support this way, okay? And a support becomes resistance this way. These are resistances and supports. So we want to see this type of pattern, the change of polarity patterns on these levels. And here we have one. So the market breaks resistance, does the retest, and the resistance becomes support. So this is the entry level. The entry condition is the pullback and the change of polarity of the resistance. Resistance changes into support. You open the long entry, and you select your target and your stop loss. Where to come out of the trade, Michael, is what I was talking about. Well, there's you can choose between two methods, or you can combine these two methods to decide where to exit the market. You can place your take profit order on a previous price structure. So this level here was resistance, then support, probably again resistance. Okay, so 0.75% was a good level to place the take profit order in a daily trade on pound Australian dollar, because there's previous price structure. But it's also a good level in terms of average daily move, because as you can see here, the market made 0.75%. Here went a little lower, made -1%, but on average, the 0.75% mark on the upside or the downside on this particular pair is quite appropriate to place your take profit order, because on average, pound Australian dollar does, I think, to remember, no, I know it for certain, 170 pips in a day. And as you can see, on the 0.75% level, you have a 173 pips range from low to high. It's the exactly the average range, daily range of pound Australian dollar. So you open a position here, the market already made 87 pips of its average daily range. So in order to complete the daily range, you're missing another 80 pips. So the percentage levels closer to the average range is the one where you have the best shot to have your take profit order filled. Okay, but this might be a little more complicated, but on average, choosing the level that you see more often on the pair is a good way to go. The even simpler way is to choose a level which is in confluence, as we say, with a previous price structure. You see, there's a consolidation here before the other leg down. So inside this area, the market stopped in order to take a decision. And there was a clear-cut break below this consolidation pattern. So probably some prices over there were not even exchanged properly. So if the market rebounds, this is the area where the market might go back and close, for example, a gap that might have been created. Okay, so on a daily basis, if we have a target that is in confluence with that price structure, that's the highest probability one to place your take profit order. Okay, does that make sense? Oh, well, I have a specific indicator, but it's something that you find, that you can find online. For example, on my FX book, there's a page dedicated to the average ranges. You can see it with an ATR, for example, a 14 periods ATR, no problem. But looking back for every instrument, with this instrument, with the percent pivot, you'll soon realize what's the average for every instrument. Okay, so the daily range, for example, of dollar yen is actually greater than the one of the euro dollar. It's 150 pips. So when the market is sideways, of course, you're not gonna see these type of excursions, or maybe you will, because this is 140. But when the market starts trending, when there's momentum, when there's pressure, well, that's a good starting point in order to set up your take profit order. And so, for example, here we've had a couple of short setups on one clear-cut short setup on dollar yen. As you can see, the market broke support. The market was already starting to correct. Then we had the pullback. The support becomes resistance, even here, actually, even earlier on here, the support becomes resistance. In the meantime, the algorithmic analysis became bearish. Okay, so this was an entry point. Okay, you know, the market does 150 pips per day. 150 is here. basically, between -1 and -1.25. So either -1 or -1.25 would have been a good level where to place your take profit order. And if you probably noticed that the levels are at the same distance from one another. So when you open a position on the -25% pivot, for example, you already know that if your target is here, -1.25%, and your stop loss goes either below, above the previous close and daily swing high, or above the resistance, you have a clear risk-reward ratio for your position, because if you place your stop loss here, this is a 1 to 4. Okay, this is my risk. No, sorry, I have to change. This is my risk, it's 1, and this is my expectation. This is my reward, which is 1 to 4. Okay, and with other instrument, it's not that easy to know exactly what's the risk profile of your operation as soon as you open it. And not all indicators tell you where to place your stop loss, where to place your take profit order. Okay, so easily. Really, I became a trader, and I also, this is something that I wanted to mention, I also became a trader when I started thinking in terms of return, not percentage return, in terms of money. So how much money do I want to make? Because knowing that, deciding that, of course, then we're going to learn how it's feasible, how should we do, but knowing that I can use another way. Also, I can add another input to the selection of my take profit order. Let me explain myself. I started saying I would like to do 2,000 euro per month. Now, how is it done? How can I put together 2,000 euro per month? Well, I need 500 per week, which means I need 100 per day. How can I do 100 euro per day? Well, I need 4 setups of 25 pips, 30 pips with a mini lot. Okay. So I don't particularly, if I know this, if I know that I need 4 of these in one day to make 2,000 a month, well, you see that I start selecting my exit point very differently. I have the levels, I can do without the levels, but how should I use the levels? Should I open the position and see what happens? Because there's another problem, especially with beginners. You know, based on what I told you, if you believe me, that you should place on your exit level on +1%, -1% on dollar yen, on plus or minus 0.75% on euro dollar. You trust me. So you know this. So that should be your exit level. But when you trade and the market is going your way, you have a tendency to want to stay, because that's the trade that's gonna make you a lot of money. Well, what usually happens is exactly the contrary, because you should have taken profit here. Well, you started to pray for this take profit here, but the market, which actually happened this time, but it's just a coincidence, but the market did this. So not only you wasted your time, but if you didn't have a stop loss, you also lost your money. But if you already know how much you want to make, and you need 4 of these to make your quota for the day, and the market does 4 of these, your job for the day is done. You don't wait for this. This is tomorrow's story. But today, you already completed your objective. And this is how I became a trader, because I had the system, I had the setups, I had the understanding of the trend. I follow the news. I know how the market moves, but I needed an objective to actually become a trader. Because if you have an objective, you utilize your instruments, your indicators, in order to get for yourself what you established you wanted to get. Okay, so keep that in mind. I don't know if this is for everybody, but this is something that actually changed my life as a trader. Well, it happened 3 years ago. I've been trading for many more years, 8 at this point, as an independent trader, because earlier on I was a financial advisor, but I had nothing to do with actual trading. Okay, but it was 3 or 4 years ago, I don't remember exactly, when I started looking at the market this way. I already had these instruments, and putting the two things together, well, I started to become profitable. You always keep making mistakes. Sometimes you lose because you're stupid, but if you have a system like this one and an objective, you can trade. You can trade, and trade can become something that at the end of the month was worth doing. Because this is how I measure if it's worth staying all day, because I stay all day in front of the charts. So if at the end of the month I don't have anything to show for it, I'm just losing my health, I'm just losing my time, and I'm just losing my money. Because if there's not money at the end of the month, probably it's because I lost some. That sounds a good way of doing it. Have a goal and stop. When you measure the daily movement in pips, how did you do that? You know that a mini lot, okay, 10 micro lots, this is the 10th part of a full lot, which would be 100,000. This is $10,000, okay, 0.10. And roughly, this is not actually true, so it's not the same for every pair, because there's a different tick value for every forex pair. But roughly, if you open a 0.10 position, you do $1, €1 per pip. So 25 pips equal roughly €25. Okay, on a certain pair it's going to be 19, on another it's going to be 29, but roughly with a mini lot you gain $1, €1 per pip. And I know that the daily levels are 25 pips apart. Okay, so I need 4 of these to make $100, €100 per day. And I don't have to make them all on a single currency pair. And this is why we look at the entire market, because if the euro dollar is not doing anything today, so on the euro dollar there was no 20 pips to be made, because the entire trading day was saw the price inside the starting range. So I had no setup on the euro dollar. I bought it yesterday, and fortunately I closed it here because it went all the way back. Okay, but today there was nothing to do on sorry, on the euro dollar, so I would have wasted my time. But I have the entire market at my disposal. So for example, there was an interesting long entry on pound Australian dollar. I actually have pound yen on my live account, taken as a contrarian entry because of the yesterday's sell-off. I bought it. I didn't buy it at the breakout of today's resistance. I bought it as a contrarian trade yesterday, because that's the other opportunity that you have with this instrument. That's the it's not always correct to say trend following, because if the pair is in a bullish trend and you go short here, You cannot actually call it a trend following an entry, but it is on a daily basis. So let's call them momentum entries, those that follow the breakout. So yesterday you had the momentum following setup. There was a small retest of the broken support, and then the market started to fall. What's that target for the short operation is also a potential long entry level. Okay, I mostly look for the contrarian entry levels, but I started to implement also some trend following entries as well. So for example, dollar yen recently in the past few weeks, well, I've been trading starting from here, not the past few weeks, the past few days. Around here, I opened my first long position. Then I had to open another one, and I cashed in this movement. Then it retested the lows. I opened a new buy position, and then it skyrocketed. Okay, so here I closed my long position, and I waited for the next one in a trend following manner, with a trend following approach. So I was kind of bummed by the fact that the market gapped up on Sunday, because I closed my position here. So I waited for the pullback, and as the market, you see, made some aligned lows above the daily resistance, I opened a new long position and I closed it here. And then I did open a short position, but I closed it too soon, and I started to go long again. I started to buy it again here, and it went below. Then I bought it again here, and then I bought it again here. And I have this position where I'm losing 60 euro, but I am confident that I'm gonna close it with a profit. But because I know what I want to make, if I have a position that makes me 200 euro, 250 euro in a single day, I'm going to take the money. I don't care if the market is going to go long still the day after. I take the money and then I look for another entry. So this is my money. And if now I'm down a bit, I'm down on the money that I made earlier on with this trade, with this trade, with this trade. Okay. So the other thing that made me become a trader was take the money and run. Whenever the market gives you money, if they are coherent with my objective, well, take the money. Because if you take money, if you take profit every day, more than once a day, at the end of the week, at the end of the month, you find something for your effort. Okay. And here, so the setups are really, really simple. So start looking at the market this way. You start from the trend. If the market is still going, if the trend is still strong, when on a daily basis or on a weekly basis, you see that the market breaks resistance if the trend is long, or breaks support if the trend is short, you either wait for the retest of the resistance or support, or you go for the breakout entry. Of course, the breakout entry could be in a way preferable, because you don't always have the retest of the support like here. Let me open the chart to make myself clearer. So here you don't have the retest of the support. This is the weekly grid. So if you're one that does not monitor the market every day and you go for the weekly grid, but the market started to go down, the support initially held at the opening of the week, but then the market couldn't go above the resistance, and this is something that we already saw on the daily grid. It's actually pretty much the same. But then if you had looked for the pullback here and the change of polarity, you probably wouldn't have opened the position. So waiting for the pullback, for the change of polarity of your reference level, is going to increase your chances that the market is actually going to do what you expect, but it's also going to make you miss some moves. So it's a trade-off. I want confirmation, or I want to be sure that I buy or sell this pair, this currency pair, this index, etc. I always, if I have to go trend following, I always wait for the pullback. When I'm contrarian, of course, so most of the time I try to open a position exactly on the level, which is a percentage level in confluence with previous price structure and above or below the average daily, weekly, monthly range, because this is actually what I look for in the market, excesses. The weekly range of dollar yen, it's 357 pips. This week was 553. So I'm basically almost 200 pips over the average range. So am I gonna buy this or what? Of course I'm gonna buy it. I probably bought it here on the average range, just above the average range. So I probably bought it here and it went against me. But when it goes against another 150 pips above the average range, I buy it again. So this is basically my strategy. And I'm also adding the trend following because I've been analyzing the market for years. I think 6 years now with these instruments, day in, day out, every year, every month. And I've always sponsored the trend following entry with this percentage model and with another Fibonacci model that we have on another software. And they have been consistently profitable, these types of entries. Okay, so why am I not going for that money as well? Okay, so this is the reason. I always say, I always make the daily analysis 2-3 times a day, and I give this potential patterns, and they're okay, and they go to target more times than not. Okay, why am I? Because of course my psychology, it takes me in that direction. I want to be a contrarian trader, and that's what I like, that's what I'm comfortable doing. But there's objectively the possibility with these instruments to intercept the trend following setups on a daily basis regularly. So why am I leaving that money on the table? That was the question. And I also like to do personally what I talk to people about. So I always talk about the trend following entry. So it was about time that I started doing it myself on my live accounts, because nobody, of course, has any doubt that I am a trader. I'm not the typical trainer that does not trade in his own life, but I also want to be completely coherent, consistent. So I like, from the analytical standpoint, the trend following setup, and I started doing it also on my live accounts. So what's the peak time for trading? There's another question. And there's also another question from Michael. How do you make that diagonal line? Let me go back to that. What's the peak time for trading? Well, the peak time for trading is when Europe and the United States are open together. So if you're in London, it's the first 2-3 hours after lunch, okay? Because you have Frankfurt, London, Rome, Paris, Madrid, and Wall Street open at the same time. Okay, that's where, especially on Forex, you have the most volumes, the biggest traders. Okay, so that's the time. I'm looking for the verb to describe this thing when the European and the American session overlap. Okay, that's the best time to trade. That's when you're going to see the biggest moves. So if you see a market break resistance or break support during those hours, it's highly likely that you're going to see the full daily range for that instrument, for that pair. And this is an important question, especially for someone like me that does contrarian trading. Okay, because so this is the NASDAQ index. Today we had a short entry, for example. Today we had a short entry and also a long entry. I know because I did a new tutorial for an American client for these things. And as you can see, well, the Nasdaq started correcting. Then yesterday, this is Powell, Jay Powell's doing, but today it broke support, pulled back. The support became resistance, and it went all the way down to the previous price structure. So today, the target could have been minus 1.50, minus 1.75, because you have this is the area of the previous consolidation. So this is where the long move started yesterday. And usually when you have these fast and excessive moves, you see the market do the complete reversal on them. Okay, so there was also this element. So yeah, the short entry and also the long entry, because as I said, the target for the short setup or the target for the long setup is probably an entry level for the contrarian operation. So you can trade the same instrument both ways during a day. Okay. I don't remember why I came here. So see the trend following, the peak time, exactly. So this candlestick happens exactly with Frankfurt, Rome, Paris, Madrid, and Wall Street open at the same time. Okay, this is actually the first hour of Wall Street morning, which means early afternoon in Italy. And of course in the UK. It's always important to know what time it is, especially for contrarian traders. Why? Because suppose the market goes to the minus 1% level. Well, there was a high volatility candlestick. Well, I'm looking to buy now. But what time it is in Wall Street? If in Wall Street is now it's 4 p.m. Okay. We're at night, it's 4 p.m. over there. Am I going contrarian here when it's maybe 11 a.m. in New York? I mean, if this is a bearish day and it's only 11 in the morning in New York, don't you think the bearish move might continue? It's only 11. So if the market, if the investors, the American investors started to sell this market, you think they're going to be done at 11 a.m.? No, they're probably going to continue selling up until 4 p.m., 5 p.m., but in New York. Okay, so during the night here in Europe, or you should always be mindful of what time it is in the operative session. The most important, because Europe is closed. So what's happening now, it's the Americans doing. Okay, and if the Americans just came back from lunch and they are selling the index, they're gonna keep doing it even in the also in the afternoon. Well, it's not a rule, but it's a possibility. So it's important that Burhan made this question, because well, he gave me the opportunity not only to answer him, but also to tell you in this particular aspect of looking at the price action in terms of what time it is, where the most traders are currently operational. I don't know. Okay. This model can be used for every asset class. There's always the same pattern: breakout, pullback, possible entry. Breakout, pullback, possible entry. Of course, different instruments have different average ranges on a daily, weekly, and monthly basis. So you're going to have to adapt to the specific instrument's volatility your selection of the target specifically. Okay, because the stop loss, it's always the same. It's always the same. It's either above the previous high, the previous the resistance, or below the previous support, below the level. Okay, but the target, that has to be based on the volatility of the instrument. So the best way to do it is to either look in the past to see what's the average on any instrument, or just look at the levels in confluence with previous swing highs, swing lows, generally speaking, previous price structures. Okay. Is everything clear? Is there anything you want to ask based on what I know that this is going to be an operational session, but today I think it was interesting to go over the various setups that we can look for, that we can use with these instruments. And maybe next time we're going to actually open some positions. And by the way, I'm not seeing anything particularly interesting right now. If I had to do something, I try to buy the Nasdaq again. Right now, let me see. This is a live account. I may not have funds. I don't know what this is. Look, if I had to buy the Nasdaq, this is how I would structure the trade. I would open my usual size on the Nasdaq. I would have preferred to open the position right here, but seeing as we are on the minus 0.5 the minus 1%, let's go with this one. I would place my stop loss here. Okay, and I would go for a percentage 0.75% rebound. Okay, so my risk reward is 1, 2, 3, and it's also roughly a 50% retracement of the daily move, more or less. It's between 38 and 50%. Okay, so this would be a trade. Actually, I wouldn't do it if this wasn't for demonstrative purposes, because the market actually already did the move. Okay, from minus 1.75 to minus 1, it already rebounded. If we went back to the daily lows, it actually made a new low. This makes me think that this low is going to be broken between tonight and tomorrow morning. But actually, I would wait for a new buy position on the Nasdaq. I would probably look at a break-in of this low. So break below, market goes back above, or I would wait for the next daily potential long entry on a down move. But if I add the structures, if we forget that the market already rebounded, did the trade basically, I would be opening a position here, and I would be expecting this type of move. Okay, the minus 2.25%, it's a magical number in for the Nasdaq. Please remember that when the market is trending, when it's in a bullish trend and it does its corrections, especially fast one, and it goes to the minus 2.25%, that's the level where I buy the pullback on the Nasdaq, for example. Oh, clear. I just want to know, says Michael, how you use the diagonal line that you use to measure the amount of pips. Oh, okay. So this is the how they call it, the cross, the Metatrader cross. You point. So if I had to verify what's the total range for the Nasdaq, I would point to the high. I'm keeping my finger pressed on the left button of the mouse, and I will go down here. So I look at the central number, because you have the number starting from the left. You read 14. Those are the candlesticks, the hourly candlestick from the starting one to this one where I arrived, and then you have 28,949 points, which translated it's 290 pips, basically. Okay, we would call in forex terms. So the central number is the range, okay, from high to low. Okay. Okay, so it's easier to see on a forex pair. So for example, this is the daily range of the euro dollar. So you see it's 516 ticks, meaning 51.6 pips. Okay, and the average range is 100 and let me check it out, is 104. So we did half the daily average range today. So there's nothing, basically there's nothing to do today on euro dollar. And this is another thing. If nothing of interest actually happens, let's look elsewhere on the instrument that we are used to trading, because many times I hear people, well, but I trade the euro dollar. Yeah, but the euro dollar hasn't been doing anything for a month and a half. Suppose you had to buy food with the money you make from the euro dollar, and the euro dollar is not doing anything. So do not stick to a single instrument. It might not be efficient. Becoming an expert at anything is great, but in trading, having a backup plan, a backup instruments where to go to make some money is actually absolutely essential. Didn't you mention a demo license of the one-click indicator? Yes. Let me go to the slides. Okay. These are the slides of the presentation. I'm gonna leave you on this one. You need to open a live account with Vantage Markets, and there's a 15-day trial. If at the end of the 15 days you deposit $500, the indicators are yours. How do you say, with no time limits? Okay, you're gonna keep them for free on your Vantage Markets live account with a simple deposit. And there's also the free trial. I want to give you the mail address. Let's see if I can copy it and paste it in the chat, so you can write an email here and ask for the 15 days trial. Okay, I am putting it here in the chat. Client success at vantagemarkets.com. If you want to make, does it also work on other brokers? No. It's only for Vantage Markets at this moment. So you need to open the account with them, but there's a really small deposit to actually maintain the instruments. So if you already have another platform, you can get one-click FX, do some operations here on Vantage Markets, and of course take advantage of the analysis in general. Okay. Sam Morris says it's fine. It's nice. Thank you. Guys, I think I spoke too much for today. I'm here if you want to ask anything else. I'm not in a hurry, but I don't want to keep any much more of your time. So if you have any other questions, I'm here. Otherwise, I would suggest to anyone who hasn't still tried the indicators to ask for the free trial and perhaps start looking at the market with the logics that I shared today. Of course, there are two other templates which I think can yes, of course. I want to start an entirely new discussion, but I'm going to explain the other templates next time. And we're also going to see how to combine the information provided, let's say, by template 2 with the horizontal levels of template 1. And how can somebody like Burhan, that's actually just starting to look at the markets, how can he better understand, for example, the price action with a simple indicator as the price assistant that allow us to see the higher time frames candlestick on the candlestick of the lower time frames. This helps us to understand how, for example, a monthly candlestick actually takes shape during a month. See, this is the end result of the trading on Swiss franc yen for January. But look at what happened inside this candlestick. This is the monthly candlestick, okay? Last month. This is all that had to happen in order to have the final monthly candlestick. This is particularly interesting when you go to the lower time frame, because you see this is a big bullish candle. But look at what happened inside this particular currency pair, which has a very erratic price action. But this indicator actually helps us to understand how the price action forms on the higher time frame, and it also teaches us not to take into consideration too many intraday movements on the lower time frames that are actually a distraction usually. Yes, I had mentioned the other templates, but this is the one I love. Maybe this is the reason why I stayed the entire hour, possibly an hour and a half on the percent pivots, because these are, in my opinion, these are the levels that can actually make a difference. Okay. Thank you, everybody. I hope you're going to try these instruments and that you're going to come for the next webinar with a lot of questions. And next time, we're going to go over the other templates and we're going to try to open some positions with these logics. Unfortunately, this is not the best time of day to open positions, actually, but we're going to certainly try and find some I think contrarian setup next time. Today we don't have sufficient gaps in balance of power between the currencies in order to find at this time a contrarian, a good contrarian entry. So let's hope for the next time. In the meantime, you just try the indicators and ask all the questions you need, and I'll be glad to answer them next time. Okay, I hope to see you for the next webinar. Thank you, Sam. That's great. That's really nice to hear. So you guys, see you next time. Have a great evening. Bye.